20 days, the government has announced a new income disclosure scheme of sorts to encourage black money hoarders to come clean. This after the 8th of November notification announcing the demonetization. Now, the centre has proposed amendments to the Income Tax Act. Let's break this down. So, if you are disclosing unaccounted wealth before the 30th of December, here is what you need to know. There will be a 30% tax and a 10% penalty levied on the amount, along with a 33% surcharge. Now, this means the centre will take away 50% of your unaccounted wealth. Not just that, you cannot access 25% of your unaccounted wealth for a period of 4 years, and that of course will be interest-free and will be put to use for various government schemes like irrigation, etc. Now, if you disclose your unaccounted wealth after the 30th of December, so it continues to be voluntary but only after the 30th of December, then there will be a 60% tax, a 25% surcharge on the tax, and that means you will only get 25% of your wealth back. All of this is only if you disclose your unaccounted wealth. Now, number 3, if you do not disclose, that means there is no voluntary disclosure, but the taxman comes after you, detects the unaccounted income, then you will face a 60% tax, 25% surcharge on tax, and then a 10% penalty on tax as well, amounting to about 82% or so. Now, apart from this, the centre has also brought in a slew of amendments to the Income Tax Act. Remember, there were question marks on whether that provision of imposing a 200% penalty, which the government had announced, by the way, on the 8th of November was legally tenable or not. So today, to close some of those loopholes, the government has announced a slew of amendments to the Income Tax Act, which really change the penalty regime of the tax department. Here's more of the details with Sapna. Sapna, so big changes there being proposed by the government, tabling it in Parliament today.
Well, the government has also taken care of the long-term implications of what happens, if there were certain deficiencies in the law, or what had to be done to strengthen the deterrence impact further. Keeping that in mind, effective April 1, 2017, 3 very important changes are going to roll out. One, under this amended section of 115 BBE, that's a proposal. Well, the basic tax rate is going to be increased from 30 to 60%, and there'll be an additional surcharge of 25%, which makes the effective tax rate at 75% against the existing 30%. That's one. But this is going to be only on self-declarations after the 30th December window expires. What if you don't do a self-declaration? You're detected by the taxman, so there'll be an additional penalty of 10%, which pushes your effective tax rate closer to 85%. Also, in terms of penalty clauses for search and seizure cases, dealing with unexplained cash, other assets, investments, stuff like that. Here also the penalty has been increased from the current 10% if you admit to 30%, and on non-admission from the current 20% to a straight 60%. And mind you, these new penalties are going to be effective on a higher base of 75% effective tax rate. So all in all, they have taken care of almost everything as far as the deficiencies or the loopholes were concerned. And this is not a retrospective amendment because it's going to come into effect from April 1, 2017 onwards.